Along, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Paramprit Singh Bakshi, VP South Asia CAPA India, joining in. Welcome to the show, Paramprit, and always a pleasure to speak to you as well. Paramprit, my first question coming to you is, if you have to look at the aviation industry, the kind of impact that we saw during COVID, how has that recovery cycle been now post-COVID?
Great. Thanks for having me, Hiral, and pleasure connecting with you. So, in terms of COVID, what we saw was that there was a sudden, dip in traffic because of the lockdowns, and everything came to a stop. Subsequently, which is last year, there was a traction which built up in terms of the airline passengers as well as the financial performance of the industry. So we can say it's been more of a recovery for the industry till now. But it has been a recovery where the financial performance has not been not been something to talk home about, though there are improvements in the revenues and stuff, but still in terms of bottom line impact, the industry, and I'm talking specifically about the airline segment, has largely been suffering. Our estimate is that over the past couple of years, the airlines would have perhaps lost about $7 billion, and this will require some time for them to make up, given that the progress in terms of traffic has been reasonable, especially on the domestic side. International is still to pick up to pre-COVID levels, but the operating environment has changed radically. So while traffic has improved and airlines have been able to generate some better yields on that, but the operating environments in terms of both crude oil prices and the forex aspect, which are largely the predominant factors for airline profit and loss, they have become quite adverse over the past year and a half. So the revenue side is still trailing the cost side, if we were to put it like that.
Right. So, Paramprit, overall, if you see in terms of all the points that you mentioned as well, there have been massive pressure points which have continued. And to add to that, the airfare caps that were borne by the government also continued, right? So is that been a double whammy situation then for the industry?
Yes, and the government yesterday announced removal of the fare caps starting next month. At CAPA India, we welcome the government's decision to remove the floors and caps. We believe it was long overdue, and we also hope that all carriers will maintain some sort of a pricing regime which is sensible, and rather than reverting to the loss leader pricing that we saw earlier. However, having said that, we believe that yield dilution is inevitable, despite airlines wanting to have a rational market because of the capacity that is coming in and other factors. But in hindsight, we believe that perhaps the fare caps saved some weaker carriers and from potential closures, and even some of the stronger players were to a certain extent happy with the caps and the floors. So it was something of a decision which was in hindsight the right decision to take at perhaps that point in time. But we've never advocated government involvement in establishing in fares and stuff. We believe that they should be left to the market forces, and hence this decision to remove the fare caps is most welcome from us.
Right. So now, once the removal of fare caps happens, by how much do you think that the airlines would actually increase rates, according to you?
Well, this quarter Q2 is typically a seasonally weak quarter, right? So the yields would definitely go down. Now depending on who's calculating what, the yields could be, let's say, in the range of 4,500, 4,400, 4,300 sort of thing. which actually are historically, if you look at it from a quarter two perspective, are actually high, which was the case even for quarter one, which saw historically high yields of around 5,000 rupees, which has never happened earlier. So given the seasonality factors, the yields in quarter two would definitely dip. Beyond that, is obviously we'll have to see how the situation evolves, how the new players who have entered the market or yet who are supposed to enter the market, how do they go about with the pricing strategies, and how do the incumbents respond to that. So that is there, but largely we believe that the operating cost environment has become challenging, and it may continue to put pressure on yields and profitability perhaps.
Right. And overall, in terms of crude as well, clearly, when it was at its peak, it was a major downer coming in. Now that it's cooling off as well, how are you seeing that impact?
So we believe that for the year, crude oil prices could continue to be averaging around $90 to $100, perhaps even more, given the various geopolitical events, and also the fact that the demand supply situation doesn't seem to be easing if we look at what OPEC is doing and what their partners are looking at in terms of supply side. The downside risk to this is severe economic recession, which would really impact demand. And if that happens, that will impact not only the crude oil prices, but it will also impact traffic demand. So while the upside is challenging, the downside also seems equally challenging for the aviation sector. And it will boil down to each organization's own strategy and tactics that they deploy to tide over. But we believe that at least for this financial year, which is FY23, crude oil prices may continue to remain at elevated levels. And if we include the element of forex depreciation, the actual INR prices of ATF for the Indian players will perhaps continue to be at elevated levels. So there's a double whammy over there, unfortunately.
Right. And in terms of the domestic aviation industry as well, there is increased competition now. I mean, we know Air India has now gone to with the Tatas. We have Akasa, which has come up as well. Jet Airways is looking to fly as well. So how are you seeing the landscape in terms of competition and in turn its impact on the market share perspective from domestic as well as international?
Right. So, international is a bit challenging to talk about in terms of market share, because given that there's so many players and stuff, so that's perhaps a different discussion. But in terms of domestic, so let's take a step back. In terms of the market structure, we believe that with the acquisition of Air India by Tata's last year, which was perhaps a seminal moment in the aviation industry in India, we believe and we see the market clearly evolving into a structure where you'll have two, perhaps three large players in the market operating. That could include the current incumbent, market leader, which is Indigo. Tata's for sure will have a certain market share, and then there's a perhaps the room for a third player to emerge, which could be a large national player in the market. And then there will be some, smaller players who will operate in their niches and respective geographies, but they'll perhaps not be large players. That's not how the market structure will evolve as the market grows and matures. So our sort of base case is that over the next few years, you'll have two, maximum three large players who will act as pillars within the industry, and then around them you'll have these smaller players who will have their own niches and cater to specific market segments and so on and so forth. In terms of market shares per se, the Indigo will continue to have the lion's share, maybe around 50% and that will be followed by Tata's and then around 25-30% could be Tata's, and another 10-20% could be by another player. Now this is subject to evolution and how things play out, but we believe that's perhaps how the market structure may evolve over the next 3-4-5 years.
Right. And overall, very lastly, if you see in terms of the growth outlook or the opportunities and headwinds, how would they look like in the industry if you have to look at the next 12 to 18 months perspective?
So, excuse me. In terms of the traffic, we believe that domestic traffic would be about 130 to 140 million passengers. And it could be more towards the lower end of this range, could be a possibility. We believe in the first half, and I'm talking for the financial year 2023. First half could be about 60-65 million passengers, and the second half could see a slight bump up of about 70-75 million passengers. In terms of the international traffic, we're looking at about 55 to 60 million passengers till March 2023. And this will obviously depend to a large extent if there's any emergence of COVID, monkeypox, other health issues, geopolitics, and so on and so forth, which have an impact on both trade and travel. In terms of the financial performance, we believe that the industry will post a loss of about $1.4 to $1.6 billion, which is pre-tax, out of which the FSCs could lose about $1 billion and LCCs could lose about $500 million. This is on the back of, as we mentioned, higher operating cost environment and perhaps limited ability of airlines to pass on the full impact of this cost increase to passengers. Some airlines may be able to do it for some sectors, but at an industry-wide level, we believe there could be a challenge in passing on all the costs without impacting the demand that is there. So that's how we see the next, let's say, 9 odd months to pan out, and then we'll pick it up from there.
Absolutely. So we are saying $1.4 to $1.6 billion worth of industry loss in FY23 is what we're looking at, right?
Yes. This is profit before tax, and this is what we are anticipating.
Absolutely. So I think a lot of things to watch out for in this space. Thank you, Paramprit, so much for joining us on the show. It's always a pleasure to speak to you. Thank you. Stay safe. So that was Paramprit Singh Bakshi from CAPA. Thank you so much.
Thanks for having me.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.